Welcome to the NYSE Euronext, NYSE ARCA, and Amex Options webcast. Today we're going to be talking about our new fee structure on both exchanges and also be talking about our complex order book. I am joined by the always illuminating Amy Farnstrom and also a special guest today, the irreplaceable Tony Psychoios, and my name is Todd Weilman. Our legal disclaimer, remember this call is just for education and illustration and some clarification on our fee structure and how our complex order book works. So let's get to the agenda. Today we're going to be talking about the NYSE ARCA options fee changes. We're going to be talking about the new tiers that we've introduced, the premium tier, the customer take discount tier, the market maker post-credit tier. We're also going to be talking about fees on the NYSE Amex Options Exchange, and then we're going to talk about our complex order book. So without further ado, I'd like to introduce you to the premium tier on the NYSE ARCA Options. And 15 names right there in the penny pilot issues, the top 15 names, everything from SPY the Spiders to USO. This is an interesting thing. We've created this premium tier, Amy, to reward and incentivize our customers and our traders.
Absolutely. The premium tier issues are selected because they're some of our most active issues, and we recognize the value that our liquidity providers bring to us, whether they be market makers, BDs, or customers, for posting tight liquid markets. And we recognize the value of that. So as an incentive in these 15 issues, we're going up by a nickel so that customers get a posting credit of 30 cents, BDs get a posting credit of 30 cents, and market makers get their posting credit moved to 35 cents. So just in recognition of the importance of providing, all of our participants with good value, whether they're on the liquidity side earning an additional credit or on the taking side being rewarded by tighter and more liquid markets.
That's going to help tighten the markets, help increase the number of contracts offered and on the bid side. I like that. So that looks pretty good. And boy, we're letting market makers get a posting credit of 35 cents. I'll be sure to walk around the floor and get every market maker's thanks for us, and I'll tell you how that went. So on that, we have that, and that's the top 15 names on penny pilot issues. And then for the other penny pilot issues, all 230 some odd left, we also have two new tiers also, and these are really exciting. The first one I want to talk about is the customer take discount tier. Now realize this is on NYSE ARCA options, and we're a make-take. So if you're making liquidity, if you're posting liquidity, you actually get a credit back to you. And if you're taking liquidity, you pay for that right, and you've had to pay for taking liquidity. So for this is for our customers that are taking liquidity. So already it costs 45 cents for customers to take liquidity. But now if you're trading over 1 million contracts, we start giving you a discount.
That's right. So instead of paying 45 cents a contract, if you trade over 1 million, more than 1 million and less than 2 million contracts, you receive an additional discount of 5 cents, which means that you're only paying 40 cents. Then if you make the next threshold of 2 million contracts, there's an additional discount on that over 2 million contracts, so that you're only paying 35 cents. And then if you hit the 3 million contract threshold, you get the 15-cent discount, which means you're only paying 30 cents. So it's a sliding scale, as that's pretty self-explanatory, but it starts at 45 cents and gets reduced from there.
Wow, it really incentivizes our trading. Makes you want to trade over 3 million contracts. And realize we're talking about a volume range. So 1 million to 2 million, you get the 5-cent discount. And then in the 2 million to 3 million range, you only get the discount on that range of contracts.
That's correct. So on the first million, you pay the full freight, 45 cents. But then each additional threshold that you meet within that tier, you get that discount.
I like that discount.
Yep. And that's on a per month basis. And that's excluding the premium tier, as you mentioned at the beginning.
Okay. Tony, anything else to add on that customer? How did you get that through? Now, Tony's with our finance department, and this is a great deal for our market makers, I think. It's going to, for our customers.
Yeah, and we emulated that same approach for market makers as well. We took the table and we said we want to provide some additional credits on the non-premium tiers, and you'll find that market makers crossing the various thresholds will get additional discounts as they move through those thresholds. It's a field of incentives. If you provide them with credits, they will come, so to speak.
I like that, Tony. I like that. So that's the market maker post-credit tier.
Yes, that's the slide that's up right now for our participants.
Mm-hmm.
And this is really exciting as well. What we've done with our fees represents some of the biggest cost-cutting efforts that we've ever made on NYSE ARCA. And as we did in the premium tier of the top 15 issues, again, we're recognizing the value that our market makers bring to us as an exchange. We really have some market makers that do an excellent job of providing tight and liquid markets. And in recognition of that, we want to give additional incentive for our market makers who are trading the most contracts on our exchange, so that if you hit the 1 million contracts per month threshold, instead of just getting a 30-cent rebate or a posting credit, you'll now get a 35-cent posting credit. And so that's within that 1 million to 1.999999 million contracts, you'll now receive 35 cents. And it goes up from there. 2 million to 2,999,999 is 10 cents, so that means you receive a 40-cent posting credit. And again, above 3 million, you receive a 15-cent credit, so that is 45 cents total credit that you receive. And these are some pretty compelling numbers, Tony.
Yeah, absolutely. At that point, even if you were posting and taking at the same rate, you'd essentially be trading for zero, right? Because you'd be getting 30 cents in terms of posting credits and 30 cents in terms of marginal take rates on those higher levels of volume.
That's right. So, again, we recognize that we've got folks out there doing good jobs for us, and we want to reward that behavior and obviously reward our folks that, are trading a lot of contracts today. So there was, a little confusion about this early on, and we just want to be really clear that in this case, the large print give us and the small print also give us. So it's a win-win situation.
I love win-win situations. And realize that, again, this is on a volume range. So, that first million contracts, you're going to get no extra posting credit.
Right,
but,
you get your 30 cents.
Your 30 cents, right. And it stays 30 cents, not zero. So
Yep.
That's good to point out. And then anything over 3 million, you're basically making 45 cents, which is... what a wonderful thing.
That's a good target threshold to reach for a market maker.
I would agree, yes. Set your sights high. That's the goal to go to. I like that. Also on NYSE ARCA, we're changing the fees that we're going to be charging for manual firm executions and LMM rights. So on the first thing, it's the firm proprietary and facilitation rates for a manual or open outcry trades. We're changing that all to be 18 cents per contract.
That's right. So non-facilitation trades are being reduced from a 25-cent fee to an 18-cent fee. And while we're eliminating the zero rate for facilitation trades, they also now fall under that 18 cents per contract fee. We are capping all of that activity at $2,000 per issue per day. And if you look at your total portfolio of business that you're doing, the mix between firm proprietary and firm facilitation trades in open outcry, we think that's a pretty compelling number for folks.
Yeah, and as a matter of fact, one of the things that we heard is that there's this thing called expense certainty. You want to know how much that trade is going to cost you. And if you want to do a gazillion firm cleared trades contract in terms of contract volume, and the most you're going to pay on that day is $2,000.
Even for a gazillion contracts.
Gazillions contracts.
You heard it here from Tony himself.
So is that a real number? Even if you do a Google contract, but that's very exciting, I think, and as you say rightly, Tony, having that certainty coming in at the beginning of the day, knowing that you're capped out at $2,000 on the day per issue, that's good information for people to have coming into the trading day.
Yeah, yeah. And a word about mechanics, guys. We wanted to implement this as quickly as possible, so we're going to do this. We're going to process these adjustments on a manual basis. That means that there's going to be a 1-month lag at the beginning to make sure that we true up to what you're due.
Right.
Excellent. So now the manual broker-dealer rate, that's going to remain unchanged. It's going to stay a quarter, and of course there's no cap on BD rates. Lead market maker rights, now those have been cut by 50%. You can see our fee schedule on the website.
Right, and you know, when you get into talking about a set per month fee, that's never a really popular topic. But you know, the way we've always looked at this is that we don't have bins, we don't have an expensive membership structure. Our OTP fee is very low. You know, to trade the whole floor is $16,000 a month. And if you look at across the industry, every exchange charges some additional freight for being a specialist or a lead market maker, owning rights to a bin, things of that nature. And you know, we recognize that people are feeling the pressure from a lot of these fees, and while we have to keep our lights on and have the money to spend on new technology and improving people's experience at our exchange, you know, we've made the step to cut fees by 50%.
That's a great step. I like that, Amy. I really do like that. Good job, Tony. Keep cutting those fees. And your cards to letters to Tony for the thank you on that. Moving on, so that's NYSE ARCA. Now, on the NYSE Amex.
And just before we go to the Amex, I noticed that our inbox for questions is empty at this point. So I just want to encourage you, you know, if you have any questions over the slides that we've just reviewed, start sending in your questions now. We'll be happy to address them during the webcast or at the end as time permits. And if you have anything specific to NYSE ARCA fee changes, go ahead and send in those questions now, and we'll get to answering them. And now we'll move on to...
Yeah, great point. And the question box is at the lower part of the screen. Also, there's a magnifying glass at the lower right corner. If the slideshow is too small, you can use the magnifying glass to make it larger. But start sending in the questions now, because Amy, Tony, and I, what country am I from, would love to answer your questions in real time.
You're from Texas.
I am. So I am from Texas. So that's true. Giddy up. So now moving to New York, NYSE Amex. We've introduced a new tier schedule for the firm proprietary manual trades on the Amex. This is an interesting thing. It's for firm proprietary manual trades will be subject to a tiered pricing based on an ATP holder's monthly volume that clears in the firm range. And then you can see this schedule right there. And it starts off at 25 cents, but it quickly, I must say, quickly moves to 2 cents.
Right. The thresholds are not a huge barrier in this case. And Tony, I know you wanted to speak to this slide.
Yeah, basically what we wanted to do is we wanted to reward high levels of volume, and so as people move, provide us with more volume, that marginal rate, that cost of doing that additional contract is going to go down and down and down to the point where it's almost, goes down to 0.02.
Right. And again, this is by each range, correct? So if you're 400 to 599,000 contracts in that range, you are charged 10 cents.
That's right. And this is for all firm volumes, all contract volume clearing in the firm range. It's not a strategy trade, I should point out, Amy.
Right.
This excludes dividend spreads and that sort of thing.
Right, but the strategy trades, they get the $750 cap.
That's right. That's right.
So they have a separate cap and a $25,000 monthly cap.
Month-end cap. That's right.
So those are capped separately, and But I think these are pretty compelling numbers. I mean, these are not impossible targets for folks to meet.
No, as a matter of fact, we're finding that a lot of firms are starting to will cross them very early in the month.
Excellent. Good news.
Excellent to hear, excellent to hear.
Okay, and then there's a little note at the bottom of the slide. Firm proprietary electronic trades will be billed at a rate of 20 cents per contract, and that's just straight across the board.
That's right. That's right. And actually, that brings us to another 20-cent rate, which is electronic CD rate.
That's right, and that's our next slide here. It's a nice segue.
Yeah,
I like that.
Yeah. Designed by Todd, who's from Texas. by the way.
We got to bring in Tony for the segues. I like that, Tony. Very good. And as we were saying, the electronic broker-dealer rates, we're cutting those by 33%. I love that.
Yeah, and one of the things that we got feedback from is saying, look, you take a look at the value proposition of the exchange, when you take a look at things like quality of execution and so forth, this is, according to a lot of customers, going to make us the primary routing destination for them.
That's good news for us, and it's good news for our electronic BDs as well.
Absolutely.
I mean, that's a very competitive rate. And I'm glad you brought that up, too, because, you know, we're by no means the least expensive exchange on the street or the most expensive exchange, you know, depending on how you look at all the different numbers. But as a value proposition, if you look at the total package, you know, and of course I'm a little bit biased here, but if you look at the total package of quote quality of execution, the speed, the throughput, the capacity that we have.
The routing broker, it's just amazing, right?
Everything.
It's just so fast, yeah.
And it all goes together to where I think that, you know, we really, truly offer a good value to our clients. And pricing is certainly a part of that, and it's part of a bigger story.
Absolutely.
Okay, let's
Excellent
see.
stuff.
What comes next? Oh, yes.
The professional customer. Now, Amy and I, we talked about this the last time, or on another one of our webcasts, and this goes into effect this month. We've explained it before, but this is for trading firms that clear activity where the beneficial account owner clears in the customer range and places over 390 orders a day on average across the whole industry. And you will now be designated as a professional customer. And, of course, if you're doing over 390 trades a day, I tip my hat to you. So, but, I mean, realize that you're still going to clear as a customer at the OCC. You're going to route as a customer, but you're going to receive broker-dealer treatment for trade allocation and billing purposes.
That's correct. So while you clear in the customer range, it's a balance, right? You don't get customer priority, yet you don't get hit with the cancellation fee. You get billed at the BD rate, but again, you know, professional customers, because there are more orders being entered on a daily basis, you know, the likelihood of there being more cancels and cancel replaces comes with that.
Right.
So
allocation of resources. Right. And so the professional customer electronic rate, 20 cents, manual rate, a quarter. And, of course, the volume designated as a professional customer will not, again, be subject to the cancellation fee.
That's a good point.
So,
hey, strategery trades.
Strategery and report fees. Now, this is on both NYSE ARCA and Amex. And no confusion here. There are certain trades that we what's the word I'm looking for, y'all? Help me out. Anybody? There's certain trades we call strategy trades, and those are dividend plays and open interest plays where you have large blocks of contracts. And those we consider a strategy trade. And on those trades, on both exchanges, they will be billed for the both the broker-dealer and the firm rate will be 25 cents per contract, but we cap it at $750 per day in the same option class.
That's a pretty low cap.
Yep. That's basically nothing.
Yep. And then again, it's on a monthly basis, it's $25,000. So both of those, the daily cap and the monthly cap, are quite low. Flex trades are not eligible for the strategy execution treatment, and we slipped in a little link here that will take you to the full fee schedule if you want to look at more closely at what order types are valid for strategy treatment.
Strategery. And realize that 25 cent per contract rate going back up is just, you know, for the broker-dealer and the firms, that only applies to strategy trades. That doesn't apply to other broker-dealer or firm trades anywhere else. I mean, there was some confusion there also, and some people had some questions. Why are you changing that? No, just realize we're talking about strategy trades here. And also, another big thing that we did was report fees. We cut those by 73%.
But wait, there's more.
There's more. It's a half a penny, yes, but pennies add up.
That's right.
So, I mean, do you want to be charged, 75% of a penny, or do you want to be charged 2/100 of a penny?
I'll take the latter.
It's a big half a penny from Texas. That's right.
Exactly.
Okay, well, we've got a couple of questions here before we move on that relate to some of our topics that we've been talking about with fee reductions. Tony, we've got one here that says ARCA LMM fees are being reduced by 50%. Does that specifically apply to OTP rights fees?
It applies to LMM rights fee. The trading permit stays at $4,000 per month per trading permit.
Right, so those are two separate things. The LMM fees are only charged to firms who have issues assigned to them as a lead market maker. OTP fees, that's a separate matter that all OTP holders pay.
But that's a great question, and thank you for asking that question.
Good one to clarify.
Yeah, keep everything clear.
And then we have another one here that asks, when do all of these changes go into effect?
April 1.
That's right. So right now, we're live with these changes, and you can begin reaping the benefits of all of the fee reductions today, right now, or actually tomorrow. Close trading right now.
Close, yes, trading is ended for the day.
So Tony will hang out with us for the rest of the presentation so that if you have other questions about the fees, you can send them in. We'll keep the expert in the room. Right now we're going to move on and talk a little bit about the complex order book. And the reason that we're doing this is because we've gotten some questions, and our friend Brandy on the trade desk has fielded quite a few questions, and we want to try to address some of those today.
Right. And we thank Brandy for the help, and a shout out to her. So let's go right to the complex order book. One of the questions that she gets a lot, I sent in a PMP plus complex order, and the order is marketable, so why did I not get a fill? Amy, what could have happened on this, do you think? Well, an interesting thing, let's talk about the PMP plus complex first.
Okay, well, I mean, the PMP plus complex order type was designed to maintain a minimum price variation buffer from the outright leg. The SEC has let all the exchanges know that to trade within an MPV of the outright legs, you need a complex order option, which we're currently building, and we'll be live with that in production in July. Until that time, so that in any issues that are not fully in pennies, to be able to maintain that MPV buffer from the outright legs, we just put in the PMP plus complex order type. Now, the secondary effect of this is not only does it maintain an MPV buffer from the legs, it also prevents the order from trading against the legs, which on NYSE ARCA has some real benefits, because then you have the assurance that you're never going to be paying take fee, possibly against multiple option legs, which can add up quickly to become quite expensive. You'll always fall under the complex-to-complex transaction rates. On the Amex, the same is true. The PMP plus complex order type will not interact with the legs. That's just by design. That's how it works. It sits in the complex order book, maintaining that MPV buffer, and then is available to trade against the contra-sided PMP plus complex order. When we implement the auction in July, you'll have a choice of being able to maintain that MPV buffer, which will work well for certain clients. You'll have the ability to mark an order for a complex order option, or you'll be able to go straight out and trade versus the legs.
Okay.
Okay?
Very nice. I like that. So even though the order is marketable on a PMP plus complex, realize that the MPV that keeps it dynamically one minimum price variation away from the price of the marketable legs.
That's right.
It's not going to trade against the marketable legs.
So until July, if you send a complex PMP plus order to NYSE ARCA or NYSE Amex, it has to be with the understanding that it's going to trade against another complex order only.
Good to know. Good to know. Thank you, Amy. So on our next one that we get a lot of is why did I get a reject on my complex order with stock? I have an ETPID.
Well, that's part of the story. I mean, definitely you need to have an ETP ID because of the equity leg. But by design, we're always looking for ways to improve customer experience. And one of those ways that we can leverage some of the, technology that we have, our options matching engine and our equities matching engine are extremely co-located. So, the majority of the time, your equity leg, if you're putting up a complex-to-complex transaction that contains a stock leg, the stock portion is going to go to the equities platform as a cross. And the vast majority of the time, it's going to go up on the equities platform. There are certain instances in that sub-second hop that it takes, I think sub-millisecond hop that it takes to move from one matching engine to the other, the ARCA equity BBO can change. And so that we don't have a lot of, failed attempts to complete the transaction, we simply just take that equity leg and send it to TRF, a trade reporting facility, if that should be the case. So once the options matching engine takes a look at all of the markets, the options markets for however many legs there are, and the stock, the BBO on the ARCA equities platform, it makes the decision that that trade can happen. It's consummated, and then it's just a matter of where it prints.
Okay. And now you're going to need a TRF agreement with the exchange.
And you need a full FINRA membership, which, I imagine most of our larger firms are already full FINRA members. And then, yes, the other piece is the TRF paperwork.
But that's not, when you sign that paperwork, you're not signing away your firstborn. You're just signing the TRF agreement like you've signed many other agreements in the past.
Right, and we're in conversations with a couple of firms. We recognize that folks have some audit trail concerns, and we're addressing those. So, I think we have a good solution for the concerns that are out there. But if you want more information about that, please contact our client relationship department at crs@nyx.com. The link is listed here on the slide.
Right. And realize on our complex order book, I know everybody knows this, but we take 5 legs on both ARCA and Amex. On NYSE ARCA, it's 5 legs. One of those legs could be an ETF or a stock. On Amex, all 5 legs have to be an option. So just remember that. Our next question, do I have to send the order in as a PMP plus complex order to use the complex order book?
Yeah, you do in all issues except for issues that trade all in pennies. So on NYSE ARCA, that would be the Qs, IWM, SPY, and the foreign currency options. Those are all priced in pennies. So on those issues, it's your choice whether you want to designate them as PMP plus or just as a straight complex order. They will process either way. Be aware that if you send in those orders in the issues that I just listed and they're marketable against the legs, then you will pay the take fee on NYSE ARCA. So you may or may not, depending on what you want to accomplish, still use the PMP plus order type or not. On the Amex, it's the Qs, IWM, and SPY that you do not need to use PMP plus, that they will come in and just process.
Thank you. And then another question: how do I hear about these complex orders in our complex order book? It's ARCA Book.
That's right.
And you get to subscribe. And I know we're charging a lot of money for ARCA Book.
No, we're not.
We charge you nothing, everybody.
Rumor monger.
Yes.
There's a $750 connectivity fee to connect to our safety network, and most folks that are coming into the exchange are going, you go through safety, so you're paying that. And beyond that, there's no incremental charges or fees for listening to the ARCA book for outright options, for our auction feed, opening imbalances, for the complex order book. We want as many people as possible to be listening to those. We believe in transparency, so no additional charges or secret handshakes or anything like that.
No firstborn has to be named after Amy or myself. But if you want to name them Tony, that's fine. Okay, and the last question is, can I use a weight order in the complex order book?
You sure may. Absolutely. So weight order, just to give a quick review of that, weight order simply holds up an order from interacting within the matching engine for 1 second. What this means simply is you can put in a customer order with no weight order designation on it, just a straight customer order, and simultaneously put in another firm order or market maker order, broker-dealer order with the weight designation. That assures you that the customer order is going to get the full 1 second exposure as required by the SEC, and then it can interact.
Excellent, excellent. So our last question, and you pretty much answered this, can a PMP plus complex order interact with another PMP plus complex order? And it
As
obviously
you
can.
said, yes, it takes 2 to tango, right? So you want to enter PMP plus on both sides if it's not in an all-penny issue. And as long as there's an MPD buffer on each side of the trade, it will meet and go up as a trade.
Excellent.
And it'll get the 10 cent per contract side if it's inter-firm, and 5 cents per contract side for intra-firm. So it's a pretty good deal.
Yeah, 5 cents, same firm.
Yep.
10 cents, different firm.
Yes, thank you.
Okay.
Thank you for putting that into English.
No, I thought you speak English much better than I do, but for simple brains like mine.
Okay, now we've got some more questions here. I don't want to keep everybody hanging on here all afternoon, but we've got some good questions here. We have a question, will ARCA follow Amex in the professional customer designation in the future? Tony, barring any market structure changes on ARCA, which we definitely are not contemplating, there really isn't any reason for a professional customer.
That's exactly right.
So we don't envision that as a possibility at all.
But a good question.
Always, all questions are good. We have a question here regarding the firm proprietary rate. Speaking to some other exchanges have a straight cap on their fees, and wondering what our thoughts are on that. And I think we really spoke to that in saying that we look at the price as one element in what makes us an attractive destination for order flow. And while we're not the least expensive exchange out there in some regards, or with certain fee caps or whatever, I think we all believe sincerely that we remain very competitive if you look at the big picture.
Absolutely.
Yeah, with our technology, low latency, ARCA.
Where will I be able to see the orders that are in the complex order book? That's a good question too. That's the ARCA book that we were talking about. The ARCA book specs are on our website. There's no special password to get to the specs. Just go right there under NYSE Amex or NYSE ARCA options in the overview, or you can go to NYX data and take a look at those specs. They tell you exactly what you need to do to code the ARCA book and start receiving that information.
And we also have a link on this slideshow that will be posted on our web tomorrow, or by tomorrow.
Then it's, we've got a question here that I'd like to answer, but if we can get a little more detail, we'll go ahead and answer it. It says, are these for orders received electronically? Well, we've covered a wide range of topics, so I'm not quite sure what information you would like to hear. You can either resubmit the question now, or please send Todd or I an email, and we'll work on that. Where can I get a copy of the presentation? That's a good question. Todd, that's posted, right, to the website?
We are going to be posting it at the close of this webcast. And it's nysc.com, and then it's on the left side, Futures and Options. If you go there, you can pick either exchange, NYSE Amex or ARCA, and it's on the next slide also. NYSE Amex or ARCA, and then it'll be in the overview, and just choose the Education tab.
Did you do that all from memory?
Huh?
Wow. That's impressive.
This is a prototype for Rain Man.
52604.
52604.
I'm an excellent driver. Hey, everybody, we really appreciate you joining us on this webinar today. We hope that it was informative. As always, we welcome any of your comments or questions after we log off today, and also any suggestions for future topics or ways that we can improve our performance for you. We certainly are open to any suggestions.
Amy, Tony, thank you.
Always a pleasure. Thank you, everyone.
Thank you for listening.
Be well.